Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Let's take a look at Forex Factory calendar. I am going to make some comments once we get over to currencies on Fed comments, or I should say Fed regional governors comments of the non-voting nature over the last week that really roiled markets on Friday. I'm going to talk about how that could potentially play out and then have some anti-arguments against my argument. Right? I always try to assess when you guys are doing risk management based stuff is to really have a counter argument against anything you may be forming a hypothesis for, right? So I'll try and put some counter arguments out, and most of this just involves the dollar's movement in relation to the other major currencies and some huge moves we saw, which has had the unfortunate event of changing a lot of forecasts among those that are flaky and flighty in the forecasting community in Forex. And I think you got to kind of stick to your guns through hell or high water if you see the tea leaves reading a particular way. So coming into next week, here's the 20th. As you guys can see on Tuesday, Chairman Powell testifies. I think he's probably going to, I could be wrong, I think he's probably going to have comments to the effect of, well, non-voting member Bullard's comments on Thursday are, not broadly agreed upon by the 12 voting members of the Fed, right? So he's going to have to spend some time walking back some of Bullard's comments that came out on Thursday. Who knows? He could pretend it just didn't even exist. But I mean, the flat out ridiculous movements in commodity prices on Thursday, which, yes, do have an effect on currencies because you saw a lot of pin action play out in the dollar index in a huge rally on that, just based upon a cratering in metals and tons of other commodities that had almost like, you have a small kid on the opposite side of a trampoline, right? You see the videos, some funny ones out there where, just not a trampoline, but a seesaw just sitting on there, and it just made, and then just a bunch of big kids come and just shing off, and the kid flies up off the seesaw. I mean, it's the same thing that we saw took place in the commodity space. So I'll talk a little about that as well. Let me make sure the Q&A window is open here. So if you got any questions, anything you guys want to see outside of my just droning on about this stuff, just pop it in the Q&A window, and then we'll go ahead. All right, so just going through the Forex Factory stuff, just for those new, because I know we've got a lot of new subscribers, especially to a couple of teams. I'm good pals with some of the leaders. So it's forexfactory.com. I want to take a look at this every week. Developers are mostly in tune with posting this, so we're all somewhat in unison on showing the most risk to any of your trading, and that's strictly just anything that's red folder news event related. So Chairman Powell testifies. Keep in mind that these times are different. They may not be synced to yours, but you can sync your own time by just clicking on the block. Again, we filter out and only care about, in my opinion, red folder events. You can always look at all the other stuff. So big stuff in Germany. Flash PMI, so forth, coming out on Wednesday. Asset purchase facility. So this is all going to be GBP related, right? This has been weaker in relation to the strength we've seen in the dollar over the last 4 or 5 days. We've seen some pullbacks in the euro and obviously the pound. What that means for the software and how it's shooting out trade requests to all sort of get into a little bit deeper here. But I think that's pretty much everything I want to say on the calendar front. Let me just jump back to American equities. You can see the pullback a little deeper in the Dow Jones industrial space, right? So for those trading a lot of equities, do know we're sort of hanging on the cliff of what I find to be fairly weak support. Remember, the orange line shows a higher degree of strength than a red line in any types of support and resistance as far as the Sine squeeze zone indicator. Let's take a look at the DXY. Again, we've talked about this a little bit. We have essentially two orange lines on the daily here forming that have brought some pretty good strength into, or a good floor for now, under the dollar. Now, I say for now because, you know, all bets could certainly be off next week. And this appears to me, this move here, to disrupt, and, you know, the market's purpose is essentially to bankrupt everybody in the long term, right? Believe it or not, that really is what typically the markets try to do. It's like if you sit in front of the tables in Vegas or any gambling mecca around the world long enough, eventually they're going to grab all your dough. It's just stats, right? The market's the same way if you don't know what you're doing. And actually read a really good piece earlier in the week that discussed how, you know, the people that are somewhat not as educated in the marketplace that just invest in a particular category that does well over a long period of time, and just leave it alone, have done far better than, you know, all these investors just spending their time trying to go through different analysis and charts. And it's, you know, it's almost like by default, the idiots do better in the marketplace. You kind of want to be where they're investing in the early term, right? Which is counterintuitive to what you'd think. This is a pretty interesting study I read. In any case, DXY popped up. This to me is kind of looking like a head fake. You know, I could be wrong. I still think in the longer term, moving to the weekly chart, as I've talked exhaustively about ad nauseum, we're looking for this 85 area once we clear under 88 eventually to play out, especially if we take on more debt as a country with all kinds of these ridiculous infrastructure packages that they're hunting down support for inside of the DC Beltway. So looking at that's kind of what, that really hasn't changed. You know, right now you've got a lot of people turning on a dime that don't know much about forecasting, because if you look at the Euro US dollar, which is our next, always our next area of analysis, where, you know, again, the orange zones counter or being uncorrelated or completely inversely correlated with the previous chart of the DXY, showing, you know, a good strong resistance at this whole 2200 area to 2300, 200, something like that. So it's about a, you know, it's a pretty decent amount of pips as far as a range. But that essentially is the area that has been tough to get through, that corresponds with that 89-ish area on the DXY down near the bottom, toward the edge of the cliff down. That's what I'd be looking for. The problem with what took place last week is now the market's just going to be nervous, right? So one thing you can pretty much expect, especially in the commodities and currency space, is that that's sort of like, hey, maybe it's going to be, you know, a slow summer, and craziness may not be brewing in the currency and commodity space related to the movement in interest rates, obviously, in the bond markets. I think that's off. So there's going to be higher volatility in all this, which is going to make it a little more important that you pay attention to developers and myself as far as getting some general direction for the broad-based majors that will help in the analysis of your any of the crosses or some of the more exotics you may trade. So then Euro JPY, I mean, no surprise here, right? So been at one of the bigger moves we've seen down, related to really just a crusher in the euro related to a rally in the dollar, right? this is what you call pin action, in my opinion, that has been mostly driven currently with movements in the dollar, right? There'll always be points in time, where the euro may be leading it around, or there certainly was many parts of time where movements in the yen earlier in the 2000s decades was sort of like the dog wagging the tail versus the tail wagging the dog type of scenario. But right now, in my opinion, it's the bond space, which is the credit markets, and then moving into currencies, it's dominated first by the dollar. And these are central bank moves that both Chairman Powell and Christine Lagarde, the ECB, are sort of playing off each other, if you will. So I personally think both of them are doing the right thing. I mean, Christine Lagarde is an exceptionally smart person. She is a really smart cookie. So, I think she's got a lot more prowess out there in the marketplace that Mario Draghi did not have. So from that standpoint, sort of my hat's off to her handling of this. But at some point, there's going to have to be a retraction of assets. And that's taking credit away from the global markets, which typically is a more hawkish type of stance, pulling back. And in the end, really all that means is that more than likely asset prices are going to come down, as we've already seen a slight glimpse of that last week with a huge blasting. And for the one question I just got, not to get off topic, but I'll forget to answer this, is that the Dow Jones Industrial is just 30 stocks that are market weighted, not capitalization weighted like the S&P 500. So it is not a good indicator, in my opinion, of the broad markets and equities in the U.S. like the S&P 500 is. But this is a capitalized weighted index, just like the DAX. Moving over to GBP USD, let me just answer that one question that popped up on this. So as far as the nothing, essentially in terms of weeklies, the move could sail all the way down to this area if we continue to see a dollar rip, right? It's entirely possible. The problem I have with moves like this is that if you're in an automated or a manual where you're accepting trades on this pair, especially in a move like this, it's totally okay to not accept these trades. I mean, if you don't know what's going on, you don't have to accept the trades. Now, obviously, if you have a flat position in your account, you don't really have any trades on, you're not in any sort of large amount of drawdown with a sequence that's going bad on you, right? Then you have a upper hand, if you will. If you don't understand what's going on with the volatility, you can always just do nothing, right? So you remember, cash is a position. It may not necessarily be something you want to be in, but protecting capital during uncertain or high volatility periods of time is of paramount importance, right? So some of the smartest internationally run funds, whether it's in the hedge space, mutual fund, or just a bunch of rich guys running a family office somewhere, right, which operates kind of like a hedge fund. There's nothing wrong with them being 30-40% cash. It happens constantly. I can't tell you. I mean, if anything, I probably, with client accounts, spend more time with larger chunks in cash, just because I want standard deviation and risk in the accounts to be low, and we can, generate higher returns without having a whole 100% account invested, right? So, and that's just my style, is always soldering on the side of heavier cash positions, even for some of our youngest and wealthiest. We have a lot of sports clients and pro sports folks. So, that's just kind of what I see as far as risk and not wanting to trade a century. So what else do I want to tell on this? Probably, I don't have the trend lines drawn, but we've broken trend. So it'd be interesting to see if we actually, you know what? Let's switch it over. key on these trend lines is really just touching a couple of candles on the bottom. It doesn't have to be perfect. And we broke trend. You could even drag this all the way out further if you want. Test back up against the trend, in my opinion, would be a bearish thing, potentially testing back up towards this area right here. Problem with all of this is that when you're looking at these chart patterns of any of these majors, or the crosses for that matter, and you've got one currency that's primarily affecting the majors, like the dollar is essentially. It is incredibly important that you're reliant mostly upon the understanding of that primary driver, right? Now, I talk a lot about pin action, but it really is just how the pins react when the bowling ball hits the head pin, right? So pin action just is the energy, if you will, that moves through, from a risk standpoint, other currencies. Right now, obviously, again, we know what are the cross currents. It's been generally weak against most crosses, right? The dollar's been mostly weak. And then there's been strength in CAD, GB, CAD mostly, first and foremost, and then obviously the euro and the pound as well. So with a little more murkiness and in the Aussie and Swiss and some of those areas. So, you know, if you have an understanding of sort of the prevailing moves or currents in broader currencies plays, it makes it easier to understand, in my opinion, a currency like this, which is essentially just the pin action of what's going on. But I mean, if I was just trading this straight out and I didn't know the DXY, I would be looking for this thing to rally, essentially getting a little probably out of the Bollinger Band right here. Let's see if we can drop these dogs on. Using my fancy Bollingers. It's really just expressing a volatility measure. So see how far outside the Bollinger Bands we are. All this is showing you is that we're going to have a higher propensity to snap back inside of that. When, how long, I don't. All I'm looking for is a statistical edge, right? I'm looking for a tradable edge from a long-term perspective. I'd be more interested in buying any types of big bounce on this. But the problem with that, especially after you have one Fed governor who's non-voting member, this is Jim Bullard. He spoke on Thursday, came out and basically said, I've got some concerns, and there's this crazy transitory ass comment inflation that's starting to come out among these central bankers. And, you know, he's echoed that more than a few times. But he basically just broke rank on Thursday and came out and said, yeah, we're concerned about inflation. I mean, if inflation continues to get uglier, all central banks have as any choice to become hawkish and essentially pull credit from there. And as that, what I have commonly, or in some cases affectionately referred to as them dropping cash out of helicopters across primary dealer accounts globally, is going to reverse. So that typically has a negative effect for asset prices as any interest rates go up. The costs to do business in any field, whether it's small business administration or buying a mortgage, or you know, the returns on any kind of fixed, which would actually increase in this cases. But still, you're not getting much return in the fixed market. But you know, it has a anti-capitalistic effect typically on global markets. So you want to understand sort of how that plays out. But that's just a little bit of a deeper analysis with some Bollinger Bands as well. Let's see. Yeah, I think we've drawn this one out enough. All right, so Euro, let me go back to the weekly on this. A bigger picture. All right, so this is a weekly chart over which really I should be paying attention about this much of the movement. Same areas of strength that you're seeing on the daily. same areas of support and resistance. All we have an orange showing up. So from a weekly perspective, this is going to be a difficult area to get through. Not to say we just need to go completely sailing through it on a positioning move. I mean, I would think that next week, if I was one of the best written algorithms out there to do what's called stop hunting, these types of algos exist, mostly run by large, high frequency trading firms. You know, they're essentially looking to hunt stop pockets in markets. So if you go back to the daily on this, you know, there's a ton of stops up in this area. So there's a ton of stop orders up in this area, probably by large institutions as well that are playing bigger positions. Wouldn't it be perfect, right? Because a lot of people are like, oh, now we broke support and we're going to get down. And, you know, what if this is a complete head fake and then they just completely rip the face off of the euro shorts? I could just see it happening. Obviously, this is going to require the dollar to drop big, right? But that's that counter argument that you always want to be thinking about. And this will always work extremely well. Now, obviously, it's more short-term thinking, trading the futures markets. But, you know, if this was a 15-minute chart, each of these candles represented 15, you know, we had this, I'd be thinking that the stop hunters are going to go up and try and complete this auction up here by sort of zippering or blasting through up into this upper area. So this is where I'd be hunting from, taking almost a counter trade, right? Stepping in front of the freight train, I often talk about not doing in order to play the coattails of the smart money, which essentially are all these HFT systems, in my opinion. All right. What else? I think that answers most of my questions, but very long and drawn out answers. But, you know, it is always my hope from, and thank you, by the way, for that comment. Appreciate that. You know, the key thing is you don't really have to have all the stuff I say memorized, guys. Just take some nuggets away from it, right? Took me 2 or 3 years of listening to this crap back in 2000 when I started heavily getting into the area when I was a young analyst at Fidelity Investments. And, you know, just listen to guys like Peter Lynch and some of the more famous investors back then, Warren Buffett, certainly. You know, you always want to be thinking about stuff that the marketplace isn't, right? And thinking in both a correlated sense and an uncorrelated sense as well. So let's take a look at the GBP USD. So this is an interesting one from a daily perspective. We got the orange. Just think of orange super strength, right? Tough to get through that barrier, if you will, right? Got another one down here. So I would think that should, at least for the short term, halt this move down and then have us, unfortunately, fortunate for martingale systems, right? But unfortunately, bouncing between these levels going forward. So that just essentially opens up the opportunity if you're trading or accepting trades on these pairs, or the system's doing it for you, is, you know, just let the sort of long end shorts play out as you trade something. It's very easier to understand unless there's a significant break from these levels. What else do I want to yak on about in this level? GBP CAD, tight range. Very surprising, by the way. Maybe I shouldn't say that. Somewhat surprising, by the way, that this didn't drop more. And very coiled, you know. This looks like the, you know, the more time you spend with this sideways trading, the tighter the coil gets. And then, in my opinion, the more it's willing to just pop from that area, which I think in this case, another pen action currency, right? It's going to have to take its cues from 2 or 3 other pairs of movements, in my opinion, for it to really show some steam. But CAD, CHF, same tight range, almost looks like an opposite or uncorrelated or inversely correlated chart, right? Same thing with GBP, CHF, GBP, JPY. Again, these are all daily charts, primarily where I focus on for patterns. We don't understand the pattern. we can't get any clarity or color on the view, we'll jump to a weekly, sometimes a monthly. Now, in this particular case, here's that tight coiling, right? And then the dollar just ripped the face. I know some people took some hits on longer term portfolios because they were betting on what, right? So you have, you know, at least in a actually, drop the bands on this one again. I'm trying to bring in concepts into you guys to see, to understand just when volatility has a propensity to pick up. So see how these bands got real tight, right? So essentially the Bollinger, if you don't know who John Bollinger is, guy's a genius. He developed these bands because typically these are something you want to put on anything that's a mean reverting. Meaning if it gets too far away from price, current price, or whatever the bands are, it's going to want to snap back inside like a rubber band effect. So not a tough concept in my opinion to picture, tough to plot. So they develop these bands and you can adjust the settings on these. Are just standard settings. Not trying to get too creative with that stuff. You could put Keltner channels on, which is kind of the same thing, or any kind of standard deviation. The whole point is you're just trying to measure some sort of expansion from the norm, or expansion, I should say, from a tighter or coiling range that's going to break out. All right. What else? So dollar yen. Drop back to the weekly here. Inside a fairly tight game. Almost looks like you have more clarity in the dollar or the other daily chart here, right? See, I got outside the bands, wanted to push back inside the bands. USD CHF, I just showed that. AUD USD as I get out on the list here, outside of the bands. Okay. Again, not trying to confuse you guys. I've got a lot of new stuff on this chart. Actually, doesn't show like it's completely aligning, is it? I mean, whatever. I'll have to adjust that. The other problem with this particular one is we've broken down out of further. This is the first time on the daily that we've broken down below these levels. Now, no surprise, dollar's been weak. This absolutely could be a head fake and then be back up in the range again. So this is one of the few times to see we're way outside the Bollinger bands on the daily. You want to let's look at the weekly bands. Yeah, we're even outside the bands on the weekly. So that just even shows more strength just to get back inside that range from mean reversion concept. Interesting. AUD CAD. So I think we sort of need to play the AUD pairs here and understanding what's going on. Not as much clarity here. Let's drop back. Tighter range, coiling again, right? Canadian's been stronger in relation to a lot of stuff. And then the other side of the crosses, in my opinion, still tight. Daily. EuroCAD, real tight. See that? That coiling effect. So, honestly, I'm not going to publicly come out and say this on Telegram channel or any of the bazillion calls I'll probably be getting over the next 2 days from some of the leaders around the world. Hey, what the hell's going on? Did you listen to my presentation on Saturdays? Usually the first thing I saw. Well, then go listen to your recording. Euro, AUD. Yeah, I already went over this. It's not much to tell here other than we got some pretty serious walls or barriers essentially trying to push through here. I mean, honestly, this could happen because if we see the US dollar start to pull back, it's certainly looking that it could peak above this. Remember, you have confirmed breakouts on a possible uptrend forming in this. Once that if you see a couple of days of candles on this daily here close above this level, it's probably going to send a lot of shorts in panic mode which is where you want to be on these breakouts. CHF JPY. Questions you Telegram as well. Here's the Euro ADUD again for somebody that wants to see it. Just the daily. Like this. I really like how this log scales playing out today. You just kind of want to stretch it out. There you go. All right. Let's see. Yes. I do these calls at 10 a.m. Pacific time on Tuesday and Saturday, but if you don't want to be live, you can listen to the recordings. Thank you very much for that, John. I appreciate that. All right. Take one. I want to show a little bit of a counter argument here. There are a couple people that I follow on, it's rare, but there are a couple people that I actually follow on TradingView that really put out some really good research. So this guy Phoenix is pretty good. The other guy I follow is Ride the Pig. Many of you know who he is. This guy is an expert technical analysis guy. So we had, and this is the weekly chart here, and they took essentially a snapshot today of this, and honestly, from a daily perspective, and you know, you're not catching much, but from a weekly perspective, this is kind of looking like it could be a head and shoulders. So keep that in mind as our sort of counterplay, in that, hey, maybe the dollar really does rally and the euro takes a crushing sell-off underneath this level. It's possible. Yeah, so one of the questions is, looks like the 30-year bonds, talk about U.S. Treasuries, looks like the 30-year bonds push higher than 10-year and 5-year. Could that significantly signify a possible dollar pump fake too? So in order to see that, I usually will suggest FinViz. I don't know if you guys have seen this before, but just click on the futures markets, switch everything to charts. So if you haven't seen this here, I'll just put this as a case then. Oops. That didn't work. I'll pop this in the room for you guys. I love this dashboard. In any case, here is the crazy movement in bonds. So we're focusing on not necessarily the 2-year, but focus on the 30-year and the 5 and 10s. See how it had just an absolute whack move. And let me actually double check. Yeah, we're good. We're on the daily. So I like this because you can see this in the correlation between each other. So, you know, no surprise, we've had some pretty big rips in price, right? As price goes up, just like that seesaw, as price goes up, yield goes down, and vice versa. But this thing gives some big moves into currencies, especially literally like breakout, if you will, in the 30-year bond. So let's take a closer look at that from a daily perspective, and you can see where we've had a pretty solid resistance, and then we just absolutely broke out from this area. Be definitely one to watch if we see another lift in the dollar. Not 100% invert or 100% correlated right now to the dollar, but it does not mean that correlation couldn't completely equalize itself out against the two. So keep an eye on that as well. If you guys, at a bare minimum, you can use the FinViz site in the dashboard perspective to see this. It's actually really cool from a Forex standpoint here. Just looking at the charts, if you just want a simplicity comparison, you can do Control Plus if you want to see a bigger picture of this here. get rid of these menu bars, right? So there's a bigger picture of the whole shebang. Just looking from a daily chart perspective, don't look at the 5-minute or hourly unless you're trading those dogs. But you can look at the weekly or the dailies, and you can just see how the comparisons. There's a number of hypotheses one can sort of build in relation to all this. I haven't talked too much about Bitcoin because the chorus of it breaking out above 40,000 was really high for a good chunk of the week, and I just didn't see it. So here's the daily on the coinage. Still looks to me like a breakdown and heading down in the 20,000 area. Should probably be a pretty decent entry, and obviously that is a nothing more than just looking at the technical analysis of this, but a little bit of a insight into this. I don't know how accurate this volume is. With me and volume, I rely on my other systems because I trust the accuracy of Linsoft's IRT software I run on my other system. I don't know that I necessarily trust this volume, although the Trading View guys would probably argue 6 ways to Sunday with me on that. But if it was a trustable number in terms of volume aggregation here, notice that every time we rallied, volume dropped off. Very simple to see that just wasn't participation in buying at this point, right? So now that we've come back down against what arguably is the edge of the cliff, it'll be interesting to see if we have another what I call crescendo moment take place, like we did on this massive sell-off. Somebody stepped in here and defended this 30K-ish, 32K-ish, or whatever area, right? It's very clear to see they came in and defended it enough that participants said, okay, well, maybe we have to spend some time balancing. It will be very interesting to see if they defend this whole area again, because if they don't, probably going to 20K. And ideally, that's what I'd like to see. Be a great starter position. They could certainly get clobbered a lot more. This thing has dropped 90%, 80%, 3 different times in its life. And they've all represented buying opportunities, which in my opinion is, essentially getting greedy when there's blood in the streets. A very famous line of Warren Buffett that is absolutely true. When emotions are crazy and there's blood in the streets, that's when you want to be buying. All right, so that is the story. 51 minutes after the hour, so I've been running about 40 minutes of my mouth. So I'll have everybody just, if you got any other questions, hold them off for Tuesday. I got a bolt, got a golf game, got to improve my rotten game, especially for our Orlando trip, so I can play some links when I'm down there at the end of July. Looking forward to it. So for those of you who are not hooked up with the Orlando thing, and the tickets are running thin and the price is going up, so get them if you want to see my ugly face on stage talking about risk. So thanks again, guys. Have a great week.